you want to buy Bitcoin for more than 4 years. I mean, the right time horizon is you buy it forever, and then otherwise more than 10. And if you can't, and the bare minimum is 4. And if you don't have the capital to hold it 4 years, right? And there's two ways to do that. You can, if you were all liquid, you could say the portion of my portfolio that I don't need to spend for 4 years. And if you're going to borrow money, then it needs to be a loan that won't come due for less than 4 years, right? But ideally, you would like to double that, right? You want the longest duration you can. I definitely wouldn't buy Bitcoin on credit card loan. If you got 20% interest rate and it could be called or come due in 12 months or 18 months, that's a bad idea. I wouldn't do that. And of course all the traders, they trade 10x, 20x leverage on Binance and crypto exchanges. That's silly, because what happens there is on Saturday night, there's some kind of fake news or something, a scare. The market liquidates, it crashes, and you'll get forced liquidated while you're sleeping and lose all your capital. So that's really just gambling. So that's what I think about that. Long duration, stable, debt. One could reasonably assume that if the cost of capital for you is less than 8%, and if your duration is 8 years or longer, you're probably pretty safe. Every time I spend $60,000 unnecessarily, I lose 1 Bitcoin. And the cost of 1 Bitcoin is $13 million in 20 years.
Saylor begins by addressing the common concern of Bitcoin's volatility, explaining how the asset class is maturing. According to him, as more participants enter the market, and as the infrastructure supporting Bitcoin becomes more robust, volatility is naturally decreasing. He mentions that Bitcoin's volatility has already dropped from over 100 volume, a measure of volatility, to around 50-55 volume today. Saylor believes that as more financial products such as Bitcoin options, futures, and spot ETF emerge, they will help stabilize the price. One of Saylor's key messages is the importance of a long-term perspective when investing in Bitcoin. He argues that the ideal holding period for Bitcoin is forever, but at the very least, an investor should aim to hold it for a minimum of 4 years. For those considering borrowing money to buy Bitcoin, Saylor advises that the loan should have a term of at least 4 years, but ideally much longer. He emphasizes that Bitcoin should not be treated as a short-term speculative asset, but as a long-term store of value, akin to buying a piece of real estate or a company's stock for the long haul. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I do think that as the asset class grows and as you have more participants, the volatility decreases, and that's just a natural dynamic. The options markets decrease volatility as they grow. The spot ETFs decrease volatility. The more capital decreases volatility, and the size decreases volatility. And so there's a lot of things that decrease volatility over time. And so I think it used to be Bitcoin was, right now it's like 50, 55 vol. It used to be more volatile than that. I think that it will have a journey going from more than 100 vol through the 50 vol to 40 vol to 38 to 35 to 32 to 30. And I think that, the VIX, if I pull my screen up right now, the VIX is like, 17, and D vol, which is VIX is the S&P vol, so it's 17, and D vol is Bitcoin, which is 54. So right now we're marching toward the VIX, but I don't think we will ever get there. I think we'll get to VIX plus 8 or something like that, or VIX plus something, because Bitcoin will be more volatile because it's global, open, 24/7, 365, more highly levered, etc., more useful. You want to buy Bitcoin for more than 4 years. I mean, the right time horizon is you buy it forever, and then otherwise more than 10. And if you can't, and the bare minimum is 4. And if you don't have the capital to hold it 4 years, right? And there's 2 ways to do that. You can, if you were all liquid, you could say the portion of my portfolio that I don't need to spend for 4 years. And if you're going to borrow money, then it needs to be a loan that won't come due for less than 4 years, right? But ideally, you would like to double that, right? You want the longest duration you can. I definitely wouldn't buy Bitcoin on credit card loan. If you got 20% interest rate and it could be called or come due in 12 months or 18 months, that's a bad idea. I wouldn't do that. And of course all the traders, they trade 10x, 20x leverage on Binance and crypto exchanges. That's silly, because what happens there is on Saturday night, there's some kind of fake news or something, a scare. The market liquidates, it crashes, and you'll get forced liquidated while you're sleeping and lose all your capital. So that's really just gambling. So that's what I think about that. Long duration, stable, debt. One could reasonably assume that if the cost of capital for you is less than 8%, and if your duration is 8 years or longer, you're probably pretty safe. And if when I discussed this, like I discussed it about 2 years ago, the 30-year mortgage rate was 2 7/8. It's like 2.8% interest. Well, Bitcoin was like in the mid 40s or 45 or whatever, but that doesn't really matter that much. What matters is you can take a long duration mortgage for low interest rate. What if I sold half my equity and bought Bitcoin with it tomorrow? Your company's worth whatever, $100 million. What if you sell $100 million of stock and bought $100 million of Bitcoin, and you held the Bitcoin for 21 years? Like now you can look at that. That's very actionable. So I think that the corporate model is interesting. And then I think we created these nation state models, but we created one for an indebted nation state. It's like, you're an indebted nation state. What happens if you start to buy Bitcoin? Or okay, you're in debt. Well, what if you issue debt to fund operating losses? Generally not a good idea. What if you issue debt to buy Bitcoin? Actually turns out to be a pretty good idea. Right? I mean, you can say debt's bad, but that's not bad. If I issue $3 billion of debt at 1% interest, and then I buy Bitcoin with it, that's how you outperform the S&P 500. It's only bad when you issue $3 billion of debt and then you spend it on things, spend it on expenses and have nothing to show for it. If you buy $3 billion of consumable goods, then it's bad. So that model, has tabs, and you can run the indebted nation state model, or the rich nation state model, or you can run the United States model, or you can run an institutional model. And I think that that's where you just start to find what you see is, oh my, every time I spend $60,000 unnecessarily, I lose 1 Bitcoin. And the cost of 1 Bitcoin is $13 million in 21 years. Now, I agree. I understand you don't like nominal calculations, but I think that nominal calculations they're useful for people, because that's how everybody else in the world thinks right now. 99% of the world is still thinking nominally. And I would grant you that $13 million in 21 years is not going to buy you what $13 million would buy today. But having said it all, if you go see someone and say, look, do you really want to buy that Ferrari? That's 5 Bitcoin. 5 Bitcoin is going to be worth $65 million in 21 years. You can retire on $60 million might not buy you as much then, but trust me, it'll still buy you a lot, right? And so what that does is, when you stretch out people 21 years, and then you crank in all of these implications, you start to get a lot more rational. Not perfectly rational, but we're talking about time horizons, time preference.
Saylor envisions a future where Bitcoin plays a central role in the banking system. In this future, individuals could deposit their Bitcoin with trusted financial institutions, which would lend it out and generate a yield for depositors. This would allow people to live off the interest generated by their Bitcoin holdings without ever needing to sell their Bitcoin. The key, according to Saylor, is having trustworthy institutions that can manage this system effectively, ensuring that depositors' capital is protected and that the loans are made to creditworthy borrowers.
So we live in a world right now where it's difficult to live off of your accumulated capital without actually being in the business of taking risk. I guess that's what I'm getting at. And I think Bitcoin offers a different possibility. I see a world, we're not there yet, but I think 10 years out, I see a world where you would be able to take your Bitcoin, put it with a trustworthy bank, and the bank would lend it out, and they would give you a yield, and you could then never sell your Bitcoin, pay your living expenses with the yield the bank gave you, and then the Bitcoin would appreciate in fiat terms forever. And of course, for that to work, you have to have a trustworthy bank, right? What is a bank in that regard? I mean, classically, that's a bank that they take capital from depositors and they find creditworthy lenders, and they charge an interest rate that covers the default rate, right? They actually do proper lending. And I guess this is what's interesting here is that Bitcoin is capital owned by the people. And so the bank basically has to get a return for their own shareholders and a return for the capitalists that own the capital, and they have to cover the credit risk. And the existing fiat banking system is using bank owned by the public and by the governments, right? The government controls the capital that existing fiat banks lend out. I mean, Apple would be worth an extra $1 trillion, right? If Apple basically started buying $20-30 billion a year of Bitcoin, they spent $500 billion on their stock. Where would Apple be if they bought $500 billion worth of Bitcoin right now? I mean, granted, it was over a 10-year time period, but if you look at that, right, how do you increase the market cap of Apple or Meta by $1 trillion? And the answer is you start to take your cash flows and your treasury, and then you buy a capital asset that's plus 40% a year instead of one that's minus 4% a year. And when that happens, you can see in our macro model, the equity market's going to look good, right? That's going to put a boost in the S&P and the NASDAQ and the Magnificent Seven. So it's not, I guess my point is, I don't want to be a doomer like Bitcoin good, everything else bad, because the truth is, you could say Bitcoin good, equity bad, and bonds bad, but if I actually back the bonds with Bitcoin, and if I back the currency with Bitcoin, and if I back the equity with Bitcoin, then they're all going up, right? So it's like just Bitcoin better, and everything else is actually going to grow, and that's the argument for Bitcoin just makes the world a better place, right? It's the constructive, cheerful, progressive, grow out of your own problems with a good technology, vision. As opposed to, this nation is going to melt down its currency and its banks are going to melt down, and we're all just going to jump on a lifeboat. So
Saylor also touches on the idea of corporations and even nation-states adopting Bitcoin as a core part of their financial strategy. He points out that a company like Apple, which has spent $500 billion on stock buybacks over the last decade, could potentially add trillions of dollars in market cap by investing in Bitcoin instead. Similarly, he believes that nations could improve their financial positions by issuing low-interest debt and using the proceeds to buy Bitcoin. Saylor argues that Bitcoin can make all other assets, stocks, bonds, currencies more valuable if they are backed by Bitcoin. By holding Bitcoin as a reserve asset, companies and countries could hedge against inflation and the devaluation of fiat currencies. This, in turn, could lead to greater stability and prosperity across the global economy, as Bitcoin becomes a cornerstone of both personal and institutional financial strategies. Please like and subscribe my channel.